Welcome, ladies and gentlemen. My name is Brad Matheny. Today is the 18th of February. This is the MENT.com, TTScanner, and Mover videos. I just got done with the MENT.com top-down investor video, and we're going over the basics of the market right now. Based on the SPY cycle patterns, which I left up to show you right here, we have a very volatile next 2 or 3 plus weeks. So be aware that we're getting a lot of gap rotation, a lot of trending, crushing, gap potential, then trending, crushing, gap potential again. This is all the way into early middle of March. And I believe that when you look at this and you look at the Gann angles, this is my Gann chart, we're going to be looking at volatility within this red box range for the next potentially 2-3 weeks, attempting to trend either upward into this 508 to 515 area, or downward down into this 475 to call it 80, 83 area. What this means is price is struggling right now to continue to trend and is entering a very volatile period, which could become very explosive. So be aware that, we may stay sideways and trend upward, or we may stay sideways a bit and trend downward, creating a wave 2 correction. Now remember, as I highlighted in the top-down video, this is a wave 3 move higher, this is a wave 4 move downward, this is a wave 5 move higher, and this is all part of wave 1 of wave 5. That is eventually going to extend quite a bit higher. But right now we're looking at the very strong potential of maybe a pullback and or an extended rally up into this 510 to 515, maybe 520 area before we start to get a deeper pullback. Everything is aligning very, very well, but this volatility is indicating that we could see, a real bump in trend with regard to forward expectations and forward trending. I would not be surprised to see a 5, 6, 7% pullback coming between now and, say, the end of March, representing a fairly strong wave 2 pullback like we have here. So now, what you want to pay attention to in the TTScanner list, this is the main TTScanner list, is notice the bull-bear shifting patterns. You're now getting a lot of negatives, a lot of downward trending, while we're seeing bullish trending diminish. So we're starting to see a weakening bullish trend. You're starting to get downward shifting bull-bear scores. This is the bull-bear score. This is how much it has shifted. So we're starting to get a broad scoping correctionary type of move in the market. Let's come back over here. Oops, wrong direction. I got to make sure I click on the right ones. There we go. So here is the TTScanner. So which one was this one? This was the value list. This is the TTScanner list. Notice that we're not getting a lot of bullish trending anymore. SOX is moving up, XT is moving up, XBI is moving up, ITA is moving up, defense, everything else is moving down. All these red levels here are moving down. What you're going to see in this continued downward trending is weakening bullish momentum to the upside. So as we start to see this, for example, utility sector is now negative with a 33 thrust pattern, and we have the negative downward shift in flat. We could be looking at potentially the setup of a broad rolling or rollover of trend. This type of broad weakening here indicates that we're getting general market pullback, general market weakness. And you have to be aware of the different sectors. For example, IGV, the software sector, is -5. You have here consumer discretionary is -6, big pullback. You have up here some -3s in the financial sector. It could very well be that we've seen most of the momentum of the rally. We're still long. We've still got a bunch of triggers over here that are long, but these will start to come off if the trend starts to flatten out and roll sideways. Let's come over here and take a look at the core inverse list. You are getting positives here. on a short trigger, positive, positive. Couple of new triggers here, short Russell 2000, and you're getting a new trigger here, ultra short Europe, and a new trigger here, MSCI, pro shares. You're getting new triggers, but again, pay attention to the rolling of triggers. This is a good one, the core list. Long triggers here, a couple of new triggers in the Russell and the ARKW. We have a long trigger here, bullish trending, bullish pop shift, bullish upward trending. We have bullish trending here, bullish upward trending here, new trigger. But notice this -1, -1, -2, -1, -2. These are all weakening. So here you have utility sector weakening. Here you have telecommunications weakening. Here you have oil and gas exploration is a pop shift trigger of a 6. Big move to the upside. But this general moderate weakening could be very indicative of a slower weakening trend. So understand that when we come over here to the MENT value list, remember, we're looking at these weakening trends here, these reds, to indicate, I mean, generally in an upward trend, you would expect to see green, green, green. But this weakening trend here could be very early warning that we could be entering an extremely volatile period or a pullback period. These types of trends here, this -5 for Microsoft, Cisco, MAN, we have here KO. These are weekly. And again, these are indicating that we're getting very strong weakening trend in Cisco. You can see all of these, SR, SWX, Cisco, MAN, Amgen, KMB, you've got WBA, Bank of America, Boeing, and UVV. All of these have got 33 thrust patterns to the downside, and a few of them have the pop shift patterns to the downside. So be aware, the volatility over the next 2 or 3 weeks is going to be excessive, maybe more than you want to try to handle. The MENT movers list, Reddit, we still have a couple of bullish here in FA and HD and DWAC, but then look at all these negative triggers. AI is bullish with a +5. IRS, I think that's what that says. Yep, IRS is bullish with a +1. Then we get all these negatives. Then we get a pop shift here, negative in AMD, Microsoft, NOW. 33 thrust pattern here with a new trigger in RC. DM is bearish. 33 thrust trigger in TD. 33 thrust and pop shift in Adobe, bearish, even though we're long and have hit our targets. So this long-term system, the TTScanner system, is essentially intermediate longer term. These are more week-by-week rankings of bull-bear ranking, indicating how much trend and momentum we have, and what the shift is, where the shift is actually taking place. So this Adobe -9 with a -4 in shift has now moved completely away from this long trigger. This is now bearish trending in a 33 thrust with a shift of -9 over the last week. This is now essentially in a bearish trend, folks, or a very strong bearish pullback. Same thing here. IT, -2, -5 is long. This is now bearish. -7, -3 for RC is now bearish with a short trigger. So be aware, we're getting a very big shift here, and we're seeing it all across the board. So when you look at these movers lists, be aware here. This is the hot list. Long new trigger here in ARKW, USFD, 33 thrust trigger in ARKW, 33 thrust trigger in ARKQ. But now we start looking at the shifting trends. Here's a pop shift trigger in CHK. Here's a couple of pop shift triggers moving down in AMD, Microsoft, Western Digital Corporation is a negative. Then look at these. Cisco, CMCSA, both moving strongly to the negative with a 33 thrust and a pop shift trigger. We have here MU, Acorn, IN, and RDN all moving strongly downward. What happens at this point, guys, is this rotation and this pullback is going to be an early sign that the markets are essentially slamming on the brakes right now. We don't know if it's going to be a deep pullback or what, but the markets are slamming on the brakes right now. Okay, so we've gone through the data. Remember, we're looking at either this range, this red rectangle right here. This is what the markets, I believe, are going to be struggling to try to break out of. Either it's going to break out to the downside, setting up a pullback, or it's going to break out to the upside, setting up a new high. Somewhere up above 508, maybe up into the 519 area or higher. Eventually, I think, though, we're going to get a pullback. This volatility is saying that this looks like the big pullback area, maybe up in this 1.0 area, or maybe up into this 1.5. Let me check this real quick. So this is that pullback off of this range. Do we have the deeper pullback down here? Yep, right over here. So we're at 125. That's the Gann angle. Okay, so we would have to look at this from a standpoint of wave 3, and that's going to come back over here with the wave 3 move looking like this 1.09 to 1.22 area is going to potentially be our upper range. See if I can move this down a little bit and get that line. And essentially, this line must have been something else. Oh, it was the range here. Yeah, that was the range here. Okay, so given this range, which we have here and down here, if I can get it, you see that we're up near this upper range already. We're really looking at this 110, 510, 512 area as being our peaking area. We'll see how this plays out. Understand that we're getting very strong weakness right now. We need to be aware of this weakness, and we need to be aware of the fact that the markets could roll downward here by maybe 6, 7, 8%, trying to set up a base. I think the base will be in this 470, 471 area, very similar to this line or close to this line right here. And I think that we're looking at a pullback. That would mean we'd have a pullback potentially from this area of about 6%. So nothing horrible, just a normal pullback in range. Okay, guys, that's it for now.